Hey guys, this is Vyom Joshi with Superior North. Welcome back to my channel. Today we will be talking about the Mosaic Company. Mosaic operates in three segments. First is its Phosphates segment, second is its Potash segment, and third is the Mosaic Fertilizantes segment. In this video, we'll review the company's fundamentals and try to find the intrinsic value of this company. So let's dive in and review the Mosaic Company.
Hey guys, let's start off by looking at Mosaic's business. I'm looking at Mosaic's annual report, and the company shows that it operates in three business segments. Its Phosphates business segment owns and operates mines and production facilities in Florida, which produce concentrate phosphate crop nutrients and phosphate-based animal feed ingredients, and processing plants in Louisiana, which produce concentrated phosphate crop nutrients for sale domestically and internationally. The Potash business owns and operates potash mines and production facilities in Canada and the United States, which produce potash-based crop nutrients, animal feed ingredients, and industrial products. Finally, the Mosaic Fertilizantes business segment includes 5 phosphate rock mines for phosphate chemical plants and a potash mine in Brazil. Next, on page 2 of this report, the company shows that majority of the company's 2022 earnings came from its Potash segment, followed by its Phosphate segment, and finally the Mosaic Fertilizantes segment. The Potash segment's operating earnings amounted to $2.8 billion. The Phosphate operating earnings amounted to about $1.3 billion, and the Mosaic Fertilizantes operating earnings amounted to about $910 million. Compare these numbers to the year 2021, we can see that the Potash segment saw the biggest growth as the operating earnings more than tripled in the year 2022. This growth in potash operating earnings were a result of Russia invading Ukraine and the sanctions that were brought against Russia and Belarus. Russia, Belarus, and Canada are the top 3 potash producers, and once the restrictions were imposed on Russia and Belarus, there was limited amount of potash in the world. Additionally, China also restricted exports of its potash. And as the supply-demand economics works, there was limited amount of supply of potash, the companies were able to charge a higher price for their product. Hence, we see that the company's operating earnings were tremendously higher in the year 2022. Now let's go to QuickFS to look at the key statistics. The company's trailing PE is at 4.5. The company's forward PE is 8.55. This implies an earnings yield of about 12%. The company's price-to-book ratio is at 1.1. Price to sales is at 0.7. Next, looking at the company's revenue. Back in 2013, the company brought in about $10 billion in revenue, and for the year 2022, it brought in about $19 billion in revenue. When we look at the past 10-year trend, we can see that the company's revenue saw a decline from the year 2013 all the way through about 2016. And ever since 2016, the company's revenue stayed fairly consistent and was trending up. It saw a tremendous growth in revenue in the year 2022 due to the before-mentioned fact that sanctions were brought against Russia, which caused the demand for Mosaic's products to go up. Hence, the company's revenue was higher. Next, looking at the gross profit. The gross profit is what we get when we subtract the company's cost of goods sold from the company's revenue. Back in 2013, the company's gross profit was about $2.8 billion, and for the year 2022, it was about $5.8 billion. Over the past 10 years, we can see that the company's gross profit follows a similar trend as the company's revenue. Next is the operating profit. The operating profit is what we get when we subtract the cost of goods and operating expenses from the company's revenue. Back in 2013, the company's operating profit was about $2.2 billion, and for the year 2022, it was about $4.7 billion. Over the past 10 years, the company's operating profit has been positive, and it follows a similar trend as the company's gross profit and the revenue. Next is the operating margin. The operating margin is the ratio of the company's operating profit to its revenue. So it gives an idea of how much money is left over with the company once it pays for its cost of goods and its operating expenses. Back in 2013, the company's operating margin was 22.2%. In the year 2021, it was 21.3%. And for the year 2022, it was 25%. What this means is every $100 that the company made in sales, by the time it paid for its cost of goods and operating expenses, it had $25 left. Next, looking at the earnings per share. Back in 2013, the company reported an EPS of $4.42 per share, and for the year 2022, it was $10.06 per share. Over the past 10 years, there were 2 years back in 2017 and 2019 when the company reported a negative earnings number. In other words, these were the 2 years when the company reported a loss. After that, looking at the dividends per share, Back in 2013, the company paid out $1 per share as dividend. It paid out consistent dividend. In fact, it's hiked its dividends all the way through 2016. And then once it reported the loss in the year 2017, it looked like it cut its dividend to 10 cents per share in 2018. And ever since then, the company's dividend payouts have been trending up. For the year 2022, the company paid out about 56 cents per share as its dividend. Next is return on assets. The return on assets is equal to net income divided by total assets. So it gives an idea of how profitable the company is in comparison to the company's assets. Back in 2013, the company's return on assets was 10.9%, and for the year 2022, it was 15.8%. The 2 years where the company's return on assets were negative were because the company's net income reported for that year was also negative. Next is the return on equity. The return on equity is equal to the company's net income divided by its shareholders' equity. So it gives an idea of what kind of return can we as shareholders expect to get on this investment. Back in 2013, the company's return on equity was 14.8%. For the year 2021, it was 15.9%. And for the year 2022, it was 31.2%. After that, looking at the return on invested capital, this number gives an idea of how good the management is at allocating the company's capital and getting a return on that investment. Back in 2013, the company's return on invested capital was 13.7%, and for the year 2022, it was 22.9%. Mosaic's weighted average cost of capital, also known as the company's hurdle rate, is about 9.5%, and since the company's return on invested capital is greater than its weighted average cost of capital, we can safely say that the management is creating value for its shareholders. Now let's look at some of the other key ratios. Focusing on the capital structure, the first item on the list is the asset to equity ratio. This ratio compares the company's total assets to its shareholders' equity. Back in 2013, the company's asset to equity was at 1.3 times, and for the year 2022, it was 1.9 times. What this means is about half of the company's assets were financed via equity, and half of them are financed via liabilities. Over the past 10 years, the company's asset to equity ratio has stayed fairly consistent, approximately 2.0. Next is the equity to asset ratio. This is simply the inverse of the asset to equity ratio. So it's just 1 divided by asset to equity ratio. For the year 2022, it's about 0.5. So you can think of this 0.5 as 50% of the company's total assets belong to the equity holders, and the other 50% of the assets belong to the liability holders or debt holders. Next is the debt to equity ratio. This ratio compares the company's total debt to its shareholders' equity. Ideally, we want to see the company's debt to equity ratio to be less than 0.5. Back in 2013, the company's debt to equity was at 0.1, and for the year 2022, it's at 0.3. Finally, debt to asset ratio. This ratio compares the company's total debt to its asset base. Back in 2013, the company's debt to asset was at 0.1, and for the year 2022, it's at 0.2. Overall, we can see that the company's capital structure has stayed fairly consistent over the past 10 years. We can see that the company is not becoming over-leveraged or trying to finance its growth by taking on more liabilities. In other words, Mosaic seems to have a conservative approach at doing its business. Now let's look at the company's free cash flow. Back in 2013, the company's free cash flow was about $299 million. For the year 2021, it was $898 million. And for the year 2022, it was about $2.7 billion. Mosaic's 10-year average free cash flow is about $734 million. Now let's use the $734 million in our zero growth perpetuity model. So what we are saying when we use this formula is we expect Mosaic to be making $734 million every year from now into perpetuity. And what would that worth be today if that is what the free cash flows would be looking into the future? So what that number comes out to be is 734 divided by the discount rate, which in this case, I'll just use arbitrarily 10%. So $734 million divided by 10% comes to about $7.3 billion. In short, if I expect the company's free cash flow to be $734 million every year from now into perpetuity, I expect the company's intrinsic value to be about $7.3 billion using a 10% discount rate. Now, this is a cash flow number. If we look at the balance sheet, we can see that the company's tangible book value for the year 2022 was about $11 billion. And let's just round it down to $10 billion. So if we think that the company's asset base is about $10 billion, and we tag on this $7 billion intrinsic value that we think that the free cash flows would be able to produce, then the company's intrinsic value, if we add these two components, comes out to about $17 billion. And when we compare this $17 billion intrinsic value to the company's current market cap, which is about $12.8 billion, we can see that Mosaic seems to be an undervalued security. Lastly, Mosaic's products are commodity-like, so there is no moat around the company's business. It is cyclical in nature, and the forecasting of prices of fertilizers is highly speculative. However, Mosaic's management seems to be shareholder-friendly, as the company has been hiking its dividends. Additionally, back in 2007, the company had about 440 billion shares outstanding, and in the year 2023, the company had about 332 billion shares outstanding. So we can see that over the past 15 years, the company has bought back more than 100 billion shares, which means that the existing shareholders' ownership within the company is growing. Finally, let's look at which value investors have Mosaic in their portfolios. There are two portfolio managers, Charles Bobrinskoy of Ariel Focus Funds and Lee Ainsley of Maverick Capital, who have Mosaic in their portfolios. Hey guys, that is all I had for you this week. Hopefully you found this video on Mosaic interesting. If you like this content, please do like, share, comment, and subscribe. And if you have any suggestions on which stock I should review next, please leave it in the comment section below. I'll greatly appreciate it. Thank you.